Welcome, everyone, to a new episode of On the Rise. Today, we're joined by Riddhi Khanna, an associate at Berkeley SkyDeck Fund, which provides pre-seed funding to teams going through the amazing Berkeley SkyDeck Accelerator program and invests in about 40 companies per year. Hi, Riddhi. Thank you so much for joining us today.
Thanks for having me, Vishal.
So starting off, can you tell us a little bit more about your background and how you got started at SkyDeck?
Yeah. So I can go into the little bit of a long story, but I come from a family of entrepreneurs, actually. So not just my mom, dad, sister, it's my grandparents, aunts, uncles, cousins. Almost everyone owns their or runs their own business. And growing up, I thought the only career option was to run your own business, and all you had to decide was in what. And I guess as I, moved through school, I wanted to be a little bit of a black sheep in the family and actually get into law or public policy. So that's where I started off. And while I was working at a think tank in India, I just realized how slow it can be. And really, change doesn't necessarily happen through policy as much as it happens through companies on the ground. And policy often follows what companies are building and how they change things on the ground. So that's when that mind shift happened. I was lucky enough that I knew someone that was starting a fund back in India. And that's how I first got exposed to venture. So it was really my first real job, which is, I would say, quite unusual. I built two accelerators back in India, both for the Indian ecosystem, one in health tech and one in urban tech. We invested in global founders that wanted to build and scale in India. And slowly I felt like an imposter. It was really difficult to tell companies how to build business without actually having done that. So I then went and worked in the aerospace industry for a bit. I was on the factory floor manufacturing nuts and bolts for India's defense industry. And I also built a product with my friend during COVID to help with COVID relief in India. And then went to business school. And then after business school, realized that, I do love venture and I want to be back in venture. And that's how I found my way to SkyDeck.
And how was the contrast that from the transition from your background in law and public policy to venture and investing?
Well, I guess because I came from a family that was pretty business oriented, it wasn't as stark. And I've lived through it. Dinner table conversations were always about what's happening in the companies. So in some ways, maybe the law and public policy was more stark than actually going into venture and being around businesses. But yeah, of course, totally different, and most importantly, totally different paces. And that's what I, didn't like with law and public policy and how slow it was. So I really enjoyed being in a super fast-paced environment where you have, young startups, just doing things every day and, building every day.
And how has your role at SkyDeck Fund evolved since you joined? What have been some of the highlights?
So I guess because SkyDeck is different from a traditional fund, and I don't know how much context you have on SkyDeck, but I can quickly go over how we're structured. We're actually a private fund. We don't have any Berkeley money in our fund, but we do have a secret sauce, and we are called Berkeley SkyDeck. And that's because we donate 50% of our management carry to Berkeley. So not only does this give us access to Berkeley's name, which is why we're Berkeley SkyDeck Fund, but really importantly, the ecosystem. So all the companies that we invest in as a result go through Berkeley SkyDeck, the accelerator program, which is a Berkeley institute. It's been around for 10 years. It is Berkeley campus. All the resources there are Berkeley. So because we're so, I guess, closely tied to an accelerator as a fund, what I do on a daily basis is kind of cyclical. When applications are open, that's when, you're doing a lot more deal flow, you're talking to a lot more companies, you're going through selection, things like that. But when applications are closed, well, of course, talking to companies never stops. You're really spending a whole lot of time with your portfolio and helping them, with whatever they need, whether that's introductions, whether that's a brainstorming session, just trying to be an extension of their team in any way possible.
And since starting in 2012, Berkeley SkyDeck has become one of the top startup accelerators in the world, with SkyDeck alumni having raised, I think, $1.7 billion in total. What, in your opinion, has been the secret to SkyDeck's success?
Yeah, the secret to SkyDeck as a whole is its network. And I can't stress, the network enough. We are lucky to have a network of over 500 advisors that help our companies, on a daily basis. They're tied to the company. They help them with whatever it is, whether it's product, whether it's customer development, whether it's hiring. And these people are, Berkeley alums, some are faculty, some are angel investors who've been there, seen that, operators at different companies. So they're really on the ground. That really helps our companies understand where they are, where they're positioned. And also, at this stage, companies are pretty small. They don't have all expertise. It helps them have extensions to their teams that they may not already have, which obviously then helps accelerate their growth. Again, in terms of network, we sit, like I said, we're so closely tied to Berkeley, Berkeley SkyDeck, the accelerator, and everything that they do there. And we sit on Berkeley's campus as a result of that, that we have access to faculty on campus that help with technology. We have access to Berkeley alum that help our companies. We have access to great talent. People graduate from Berkeley on, every year, obviously, in every industry. Through every level, whether it's an undergrad to a postdoc. So all these different aspects of the network really help our companies and help them, tap into different resources as a result of it. And then, of course, being a fund, we have, networks of various investors that we've built over the last 5 years or so that come to our demo days and things like that, that really help our companies get that step up in raising their next round. I guess the way we think of, our investment thesis is that Berkeley is this incredible platform of resources that companies can leverage. And that's really what makes SkyDeck companies get that leg up.
And obviously your expertise is more on the fund side of things, but can you walk us through some of the factors that might go into whether a startup gets accepted to SkyDeck or not?
Yeah. So we have 3 levels in our application process. The first is the online application. And here we're just really trying to understand, is this a credible founder who's building something interesting that's different? We don't want to band-aid on an existing solution. Like, is it truly different? And is it an interesting market? This is often the most difficult cut that we have to make because, with this last application cycle, for example, we had 1,800 companies that applied. And we only interview about 150 or so in the next round. So this is often the toughest part of the application process, where you just have a couple of sentences and paragraphs and videos to help you decide. In this stage, I would say what we look for is, like I said, is this a big enough market? If it is a big enough market, if it's a crowded market, why now? What is so different with what they're building? Why is the timing right for them to build something new? And are they at the right stage as a company? Is there some founder market fit here? So pretty basic questions that we like answers to in this stage. Then we do a really quick 20-minute first round interview. It's a pretty standard interview format that we have. We have about 8 minutes of them pitching and then 12 minutes of Q&A. This is when we really spend time asking all the questions that we had from their application. Try to understand, does the founder have any deep insight on the problem that they're solving for? Does the founder have any deep insight on the competition around? Is there any deep insight on their business and themselves? Do they know what kind of milestones they need to hit to take them to that next level? And then the third round is a 50-minute interview, and we do a lot of back and forth with founders between the 20-minute and the 50-minute interview. Often, their answers are super detailed, so the Q&A doesn't stop with those 12 minutes. But that 50-minute interview with about 50 companies really breaks down into, who's the team initially in those 20 minutes. Sometimes we often just meet the CEO. So who's the rest of the team? what is their 6-month plan, right? Can they actually execute quickly enough to be able to be well positioned to raise that next round of funding within 6 months? So those are the kinds of questions that we look for answers to in that 15-minute interview. From going from 1800 to 20 is tough. And I would say at that stage, there's a lot of really, really great companies that we unfortunately can't say yes to. But team, timing, product, basic things that we look for, I guess.
And can you walk us through like the timeline for the investing process at SkyDeck Fund?
Yeah, we're happy to make the investment right up front when they get the acceptance from the accelerator. So as soon as that happens, as long as all the paperwork's in order, we like to make the investment up front so then they can use the money to really help accelerate their growth and be well positioned to raise that next round of funding in 6 months.
And you recently closed Fund 2 and raised the amount invested per startup from 105K to 200K. Can you share any details behind that decision, like why and why now?
Yeah, so we were super, I guess, fortunate for Fund 1 to have performed well, and fortunate to be able to raise a larger Fund 2. We realized that our thesis of betting on underappreciated founders was working. There's a lot of great companies out there around the world that want to build and scale here in the US that just don't have access to the kind of network that SkyDeck can provide them. And at the same time, we didn't want to change the flavor of the accelerator. We pride ourselves in being small, in being in person, in really knowing the founders in and out. And with that extra money, we didn't want to, go to a position where we were 10 times the size of the cohort, for example. So raising the check size was a good balance of keeping, the flavor of the cohort, keeping it small, but at the same time, increasing the amount of ownership that we have in these incredible companies as well, and giving them a lot more money to play around with.
And touching on that last point, SkyDeck Fund, I think, takes 7.5% for all teams. Have you had any challenges with valuations with more later stage startups joining the program? And how have you gone about tackling those challenges?
Well, I guess the stage is important to us, and we invest in companies that are at that stage that there's some validation in their technology. Their product doesn't have to be fully fleshed out, but there's some validation in what they have and what they're building for, and we really help them with what does product market fit look like to them. So it may just be a question of it not being the right stage for SkyDeck. Saying that, though, if you ask any SkyDeck founder, I'm pretty sure no one will say that they came to SkyDeck for the money. Everyone will say that they came here for the network and the resources that SkyDeck provides. And as a result of that, I think most founders are happy to give us our terms. We do work with founders who've raised, some money before or have, valuations that are slightly higher. We won't compromise on the economics. It'll always be, 200K for 7.5%. But the way we structure that deal could change so that there's no down run on their books, but our economics always remain the same.
And you talked earlier about maintaining like the flavor of the accelerator. What impact do you think COVID has had on the accelerator experience and for SkyDeck companies? Like any opportunities that were missed or gained?
Yeah, I think it was hard because we were a completely in-person program before COVID hit, and of course, that had to change, and we had to go to remote. And one thing that I guess we don't talk about enough, and what the founders value, and is just that community, right? All of them sitting in the same office, being able to tackle problems from the trenches on a daily basis. These founders are not just co-founders or other people building businesses, but they really truly all become friends with each other. We sit in the same office. You don't have to set up time to talk about something. You can just sit over lunch, hash something out quickly, and that time to from problem to solution becomes much shorter if everyone's just kind of sitting together and you can brainstorm quickly. So that COVID really affected that and affected, I guess, that community. But I think we're finally at a position where we're pretty much back to what we were pre-pandemic. We are a hybrid program now. We do 6 weeks upfront and 6 weeks towards the end of the program in person, and the rest is all virtual. But saying that, with the last batch, a lot of founders decided to just stay for the entire 6-month program. So I think as the world is slowly getting back to whatever the pre-COVID world looked like, founders are really valuing being here, being in the Bay, being in person, being able to talk to random people that walk into the office that may be your next customer, maybe a potential investor. Just that community and bringing that back is slowly happening now.
And I think I'd imagine it'd be much easier to tap into like the Berkeley network and the ecosystem being on campus and in person.
Exactly. I may have a meeting with someone who may be, an awesome advisor for a portfolio company, but if they're not sitting right opposite me, or if I can't see them walk into the room, then that just becomes an email introduction. Otherwise, I can just quickly pull 2 people in the room and say, hey, spend the next 10 minutes chatting. And those kind of serendipitous interactions only happen in person. And the Bay Area is a great place for that. And we see more and more founders, recognizing that again and choosing to be here for the entire 6-month period.
And SkyDeck recently closed applications for batch 16, I believe, in February. What were there any interesting trends you noticed, and in the last few batches as well, like the companies that are admitted, particularly as we start to leave the pandemic behind us?
Yeah, I would say less with just the pandemic and more with just what the environment's like. Of course, generative AI is huge, and we saw a lot of companies in that field apply. Healthcare, we've seen a lot of companies apply in the last couple of years. We've seen a lot more deep tech companies. This time we saw a lot of companies in 3D printing, kind of a niche space that we saw, a whole lot of companies apply through AI and 3D printing. So AI being the big umbrella, and then underneath that, a whole lot of industries.
And what advice would you give to founders looking to apply for SkyDeck Batch 17 in August?
We have a type form on our website. I would say, even though applications aren't officially open, put it in there. That will help us let you know that application's open. But more importantly, if you're interested, we'd be happy to get on a call with you even now and sort of track your process. So be in touch with us. Let us know that you're interested, and we'd love to speak to you. And then I guess I already went through what we look at in each of the 3 steps in our interview process. So if you can master those, then we'd love to meet you.
And based on your experience, what have been some of the qualities for strong founding teams that make them successful?
Yeah, this is interesting because I would say at our stage that we invest in, this is a lot of what the decision is. And I would say the ability to execute and hustle is super important. And then also a founder having a clear vision of what the world is going to look like post their product being out there in the world is really important. How they get to that vision could change. They may pivot 100 times, they may never pivot. They may do things differently than they first intended to. But really a clear understanding of this is not right, and I'm going to do this to make it right, it is, I would say, super important to have. And they'd stop at nothing because they truly believe that, the world will be different and be a better place because of whatever it is that they need to solve for. And nothing will stop them from solving for that. And then I guess, we spoke a little bit about just how much help there is. I think a really strong founder is also someone that's open to listening to feedback and ideas, but strong enough to understand what feedback to take and at what timing that feedback's right for them. So those are different qualities that you can't really measure for, but in a data-driven way, but I think is true amongst most incredible founding teams.
Yeah, I definitely agree. And to close out this interview, one final question. What advice would you give to young leaders who are looking to go into venture capital and investing in startups?
Be around early stage companies as much as possible, be around deals as much as possible. One thing that I still do a lot is whenever I'm in a room of, with founders and other people that are evaluating their business, I always make a mental note of, hey, did I even have those questions that were being asked, and then what kind of insights are those questions giving you? So, for example, a question about the market doesn't only tell you how big the opportunity is, but could also tell you how the founder is really thinking about their vision, right? So what are the insights that you can gather and distill from what the founders are telling you? And I think that only comes from just being around as many deals as possible. And then really working with early stage founders to understand their mentality and, you know, being in the trenches with them. It's the best way.
That's really great advice. And thank you so much, Riddhi, for taking the time to speak with us today. I know you're crazy busy.
No, of course. Loved it. Thank you so much.
Thanks everyone for joining us. Stay tuned for my next episode and see you all soon. Bye.